Kia ora and welcome to the Kiwi Advisor Network podcast. I'm the host, Warwick Slow, and today's guest is Scott Innes from Mortgage Bliss, based down in sunny Whakatane. Now, Scott is a bit of a different guest to what we've normally had, as Scott is, I'd say, relatively new to the industry. He's been in it for about 2 years, and he came in it with no prior industry experience. So it's very interesting listening to his journey from getting from, we'd say it's like effectively a 0 out of 10, you might disagree with that, up to where he is now. It's really impressive. He talks about his process, how he gets good outcomes for his clients and where he's going next. So he does insurance and investment advice. So if you're looking to get into that, or you're looking to hire some new advisors into your business who might be interested in it, this is a great resource and I'd highly recommend it. So otherwise, sit back, relax, enjoy the podcast. Thanks so much for joining us here today, Scott. Scott, so what I find really interesting about you is that you've come into New Zealand, you've immigrated from Canada, and you've somehow landed in insurance advice without ever having any previous experience. Like, how did you decide to get into it, and why insurance?
Sure. So we've been in New Zealand now 5 years. Dad was born and raised, so citizenship was quite easy. My wife and I have been together since we were 17, high school sweethearts. So it's like, buy a house, have kids, travel the world. So we thought weren't quite ready to settle. We actually talked to a mortgage advisor in Canada and like, no, we're not ready. So it's just one-way ticket to New Zealand. I wasn't sure if it was going to be 3 weeks or 30 years. Just figured we'd wing it. Ended up getting a job at Work and Income. So I was there for 2 years as a case manager. Absolutely loved it. Very many other case managers say no, I don't like it, but I think I had about a 3-year cap on it where I would have lost my mind. And so after about 2 years, I was like, no, something needs to change. COVID hit, so kind of helped with our decision on staying in the country or not. So we decided to have a baby. So 2021, we got pregnant, healthy boy, he's doing well. We're both in government jobs, didn't really want to have our kid in daycare for 40, 45 hours. So we thought one of us has to work in the evening. So I started looking at what can I do in the evening? Doesn't really matter. We were both looking, so it didn't matter if it was me or her. At the same time, my brother actually introduced me to a book called The Barefoot Investor. I thought, didn't know you could actually do this for a living. That's pretty cool. Because at Work and Income, that was kind of the thing, is how do we get people financially independent and off social welfare, right? So to do it in a professional setting and a little bit of a higher scale, I thought was a lot more impactful. So I just jumped into my level 5s, just thought, I got to get the study before I can get a job. About halfway through, did the first 2 strands, saw an ad. It kind of looked like a scam. It was like, work your own hours, be your own boss, unlimited potential. I honestly, it looked like a scam.
Like that ad for, I think there was like a bus driver campaign, and it said like, have your own corner office, drive a $100,000 vehicle. And it's like, become a bus driver.
Yeah, something like that. And so I wasn't even going to reach out. And then a couple of days, I'm like, something seemed legit. And I looked into the industry and I thought, there's actually fairly common. I saw other postings that were a lot less capital letters, but so I reached out. I thought, I may as well do an interview. Why the heck not? Had a look into the company and they were good reviews. So I went with them they signed me up middle of 2021. So just before my son was born, had to finish the last 2 strands. So I did investment and insurance. February, they had their onboarding, 2022. So my son would have been 3 months, came up to Auckland. With our 3-month-old kid. That was fun. Did the training, and then so my first client March 1st, just kind of thrown in the deep end.
Jeez.
Yeah. I remember that one. It was didn't get across the line.
So you're a new advisor.
Yeah.
I got to know, because how did you pick up the skills to get good outcomes to your clients straight away? Because insurance, people want to buy a home. They go to a mortgage advisor. Insurance, most of the time, it's one of those grudge purchases. How did you train to get that set up so that you got the message through to them?
Yes, I've been doing customer service, retail, basically since I was 15. 33 now, so 34 today, actually. Birthday today.
Oh, it was your birthday?
Yeah.
Congratulations.
Thought I'd do a podcast. Be fun. But it's just, this is a customer service job. It's not a product job. Like products you can get from the BDMs, you can get from other advisors. You can learn products after you learn your client, if that makes sense. Once you learn your client, you learn your customers, get your customer service skills, you learn what they need, prioritize what they need. Then you go to the BDMs that help, the client doesn't need to see that.
That's so true. I think even when I joined here, so I came to trail with no industry experience. And I remember at the same time we were trying to buy a home, I remember learning so much about like the pain for advisors and what parts are difficult just through that experience.
Yeah. Well, that's our job, is removing pain points, right? Like anyone can kind of go online and get insurance. It might not be the best insurance, but you can. But we're removing pain points for clients, and they don't have to learn about all the products. I mean, you should be getting some education during the process, but they don't need to learn about every product from every provider. They should be given an advice that's thorough and tailored, really.
And were there any resources throughout your learning that you found really useful that you recommend to other advisors looking to get into the industry?
I think just knowing the industry, because it's not, I'm an insurance advisor, but I don't do insurance. I'm worried about their budget. I'm worried about their mortgage. I'm worried about the interest rates going up the next year for them. Like, their spending habits, their health. It's just, you got to be involved. You got to revamp your whole social media so it's all financial services. Like it's, maybe I just love it. I don't know, but you got to know everything, a little bit everything.
I can hear it in your voice. Like if you're passionate about it and you care deeply about your clients and you want a good outcome for them, the products are actually just a byproduct of it, rather than saying this is what you need.
Yeah, I like to say with insurance, I like to use it as offense rather than defense. A lot of the times people think as insurance for defense, like it's there if something happens. I like to actually say, we can use this so we can take on risk on our investment. We can actually buy an investment portfolio because our insurance is covered. So if something happened, we don't have to sell everything. We don't have to downsize. We don't have to, we can still build our wealth. So I like to think of insurance as offense rather than defense.
I like that.
Yeah.
It's it does play into the whole North American sports culture as well, which
probably
helps. Yeah.
Ice hockey for me.
Yeah, nice. Defense. No, okay. So how long did it take from when you first started until you started? You said you spoke with the client early, but how long was it until you felt like super comfortable? Like when you were chatting with a client, you were the expert.
Still don't.
Still got a bit of imposter syndrome, but it's natural.
That was huge at the beginning. Like you have to fight that. Like I'm pretty sure everyone will have that. If you don't, I mean, you should. I don't know. I think it's healthy to have it because you need to be out of your element a little bit. But it's probably January the next year. December. I remember my first December. I had a really good December. And I got a really, fairly large policy across the line. That built my confidence a lot. And then kind of January, February, March, I'm like, okay. Actually, it was probably when Mortgage Bliss came on board. Is they kind of brought me on board and trusted me, and that's when I'm like, oh, I don't really have anyone to fall back on now. It's just me. So I had to get rid of that imposter syndrome and be like, that's just me now. We got to go.
Great.
I work well when I'm kind of backed into a corner. So I think probably that was when it was.
It's always in this case, it's very much a sink or swim.
Oh yeah,
type profession,
big time.
And in that type of position, like if you've got a family, you've moved to Whakatane, you're gonna swim.
Yeah, well, we've had 2 kids since we basically started this. We have a 7-week-old now too. So it's
congrats.
Yeah, it's I wouldn't be here without my wife, Matt. She's awesome. And she's been supporting me the whole way. But then you have to have everything at home sorted too. Like if you're someone who's gonna get 10K in commission in one day, and then spend it on a boat or spend it on a holiday, or you might not get money for 3 more months, right? 2 more months, 1 more month, who knows when it's coming next. So you gotta have that stuff sorted first, or else it's gonna be hard.
And it must be tempting sometimes, even though it's you want to help the clients first, getting remunerated for it. It's obviously very nice too.
Yeah. So, it is.
Yeah.
It's quite a lucrative industry. Like it's a lot of money flowing through. What's interesting, I find with insurance, and it's same with mortgages, like you get, whether you use an advisor or not, you're paying for it, right? Because the premiums are the same whether you use an advisor or not. So it's built into the premiums. So you may as well use one. Same with a mortgage broker.
Like, why not check?
Yeah.
Okay. And then, so did you so you did the level 5s first, and you started with insurance, and you're doing the investment side of things straight away as well?
I had those both done before I started. I figured if I was going to do it, I may as well just do both.
And how long did it take you to do your level 5 studies? So you would have done the core, the insurance, and the investment one. How long did that take for you to get them done?
On average, 2 months each.
Okay.
But I was working full time as well. So I did with, it was awkward timing. Like I tried to do more than one at the time, but intake is like 2 weeks before it starts. So even if you finish within 2 months, you got to wait 2 weeks. Yeah. So probably spent 6 weeks on each, but you could probably, if you weren't working, get it done in a month. But they give you 3 months per strand. But yeah, I'd say 9 months. The first study takes a while because it takes a little bit to figure out how the structure works on what they want.
And you're starting from scratch.
Yeah. Yeah. If you asked me 5 years ago, I would have laughed at insurance. I'm dead serious. Well, then something happens, right? You have a family, and it's like, oh my goodness, if we lose our income, we're in trouble. You have a house. Hey, if we actually lose an income here, we're in trouble. Especially as a male. Males don't seem to be very receptive to insurance.
I wonder why that is.
Yeah. Yeah. So it usually takes an event or someone to just think about it. Like you still get people who don't like insurance, right? And that's fine. It is what it is.
Sometimes they need a catalyst or something to...
Yeah, and hopefully it's not big. Hopefully it's just a small event, out for a couple of weeks with an injury or something. And like, oh man, that was tough. What happens if this is longer, right?
God. And you'd always pick up stories over the years, and I've had other insurance advisors on here that have had close personal family members that have been affected, and that there becomes like part of how they communicate the value of insurance to their clients.
Yeah, it's once a client's seen it close to home, it's kind of, I don't want to say easy, but it doesn't have to
makes their decision easier. Yeah, for sure.
It's just a matter of because I don't like stockpiling people with insurance. Like for people to have a full protection plan on insurance, it's expensive. It's 5 products. To have all 5 is kind of big. You get some clients who have it, but it's then a matter of communicating. Okay, where are your priorities? Like some people are going to have family members that they can rely on, or for cash, or maybe it's somewhere to stay, or it depends what it is. Some people are still on their parents' health plan. Like, don't tell them that. I've had that a couple times. Like, don't tell them. Don't call them up and ask, "Am I still on your plan?" If you know you are, you don't want to remind them. Take it for free while you can.
Exactly.
Yeah, because they will figure it out one day,
and then you'll be straight off it.
Yeah. Then you give me a ring, right? But yeah.
Yeah, I feel like you've obviously learned a lot in a very short amount of time. What's next for you?
We're looking at growing. So I'm the only insurance person with Mortgage Bliss. So it's so kind of, we're open to a little bit of risk there. So we're trying to bring on a second one, looking to get into a kind of a coaching mentorship situation, but it's going to be difficult because I'm aware that I've only had 2 years experience. So it's got to be the right person. We're not going to force it. And the mortgage team is looking for more mortgage advisors. So it's just finding the right people, just growing it slowly, maybe stepping back and mentoring a few down the years. But I'm quite happy. I'm off work every day till 11 with my 2 kids. Like, how many jobs can you do that and make a pretty good income?
Not many.
No, like got swimming in the morning on Wednesdays. We go to the park on Tuesdays. Like, that's pretty cool. And then evenings are hard because that's where I work.
True. But are you talking to a lot of people outside of traditional work hours?
I thought it would be more, but people seem to find time. My leads come directly from the 3 mortgage guys. So I'm pretty fortunate how I'm set up. And clients seem to want insurance more than the first company I was with. We were kind of trying to find people with insurance and make it better. But this is people who don't have insurance and just got a house, right? And they know they need it.
The mortgage advisors working with you, are they, giving the client a bit of an indication of what that conversation might entail?
Yeah.
Or is it so it's not completely cold? Or how do they warm them?
They combined have about 61 years at the bank. So they've been told how to cross product, everything, KiwiSaver, insurance, all that stuff. So the leads that come across my table are like very warm. Very warm. They already know what to expect. They know when I'm going to call. So it's just, the conversion ratio is really good, which, so I'm not spending a lot of time on clients that aren't going to be clients, if you know what I mean.
Yeah. You can tell pretty quickly, are they going to be a good fit or not?
Yeah. I mean, that's the one thing they don't know. Like, they don't know the mortgage team that is, if there's pre-existing conditions, it's challenging. Right. So they don't ask those questions. They leave it to me. But, I've got the confidence to tell clients, like, actually, it's probably a good idea to talk to your current provider or your current advisor. Because I don't even like touching clients that have an advisor, because it's just, they've been given advice. They've already trusted someone. Let's just let the advisor know that you need to adjust it a bit.
Yeah. And it's a small industry, I just feel that
Karma.
There's a lot. Yeah.
It's not karma. It's the way you carry yourself, right? It's the same idea, but I'm a big believer in.
It's a small industry.
Yeah.
And
small country.
Very small.
Especially in Whakatane.
Yeah. I can imagine, like, it is like rural New Zealand.
Yeah.
That's, I actually spoke to somebody who's in a different part of the country, but rural. And they said there's only a few brokers, and like occasionally people call up and say, hey, I spoke with this person and yada, yada, yada. And they'll just say, hey, look, like, if you're already dealing with them, like, best have that conversation with them before you come back to me. If you can't resolve it with them, then we'll have the conversation. But if you go back to them first and try and get that resolved. And it's amazing because it just comes back and it creates a better environment for the end consumer as well, and builds trust in the industry.
Well, it's in Whakatane, most of the policies are with the banks. So there's more than enough business out there for us, right? And it's kind of like the wine industry in Kelowna and British Columbia, back where I'm from. So they, in the 90s, they kind of fighting California a little bit. And they got together and created like something called a VQA. So if it's called VQA, the grapes are from that region. You can source the actual vineyard. And they started branding together. They tell customers to go to their competitors. So rather than competing with each other, they actually created a destination. So yeah, it's kind of like that. Like, just see an advisor. So in Whakatane, like, you shouldn't have your policy with the bank. See an advisor, and then it'll come. Some of the business will come back to me. There's only 3 of us. Yeah. Doing it strong. Like, a few people do it, mortgages and insurance, but I think there's actually only 2 of us doing only insurance.
Right. Yeah. And do you talk to the other businesses in that region, and like, is there a relationship there?
Yeah. We go to BNI together.
Oh, cool.
So I'm only there at BNI with KiwiSaver. She does the insurance. She was there first, but that's all right. Just do KiwiSaver at BNI, which is fine.
And look, you can still, get prospects and, get in front of people that way.
I mean, she doesn't do group cover. So she gave me a referral for a group cover, because like, I haven't touched that yet. So so we work together. Yeah.
Yeah. Coming back to the wine industry part, I remember it's like that Turkish rug type thing. If there's one shop set up in the market, like, people aren't really going to go to it. But then if there's multiple of them set up, people go, oh, that's where you've got to go for that.
That's exactly right.
I didn't even know there'd be wine in Canada.
They're not big. It's good. We would do better with white wine, not so much red wine. It's too cold for red wine.
So everybody would know, like Napa Valley or around the Russian River.
It's the same desert.
Oh, right.
It's just the tip.
Yeah, just right.
Yeah, just the tip right of the north. Yeah.
Interesting.
Yeah. So it doesn't get as hot, but yeah.
Yeah, it's like some parts, like New Zealand, obviously, there's like different areas, like Central Otago is known for the Pinot Noir. And I mean, do we want to dive?
Sauvignon Blanc. I can do a whole wine thing. That's what I did. That's what I did in my 20s. So I sold wine and beer for a living. So.
Oh, you must be very passionate about it. Still?
No, I've lost it a bit with the kids. With the kids here, it's like, don't have time.
Kids aren't very fun to drink with, are they?
No. This is the morning after is the problem.
Oh, yeah. Yeah. Okay, so you've 2 years in, around 2 years in now. Like, if you could go back and tell your previous self, like, one good tip, what would it be?
Relax, probably. I put too much pressure on me. It's hard to sit there doing nothing. I don't know how that. you get some weeks where there's just clients aren't getting back to you. There's no leads. You're just sitting there doing nothing for a couple of days straight. This would have been in the earlier days, a little bit different now. But even yesterday and today, I just blocked out my calendar, But yeah, just take some pressure off. It's going to be okay. I really focused on learning rather than money the first year. So what can I learn with every single client? How can I learn? What did I do wrong? What did I do well? Because we don't focus on what we do well very much as humans. We always focus on what we do wrong. But just relax, and planning your day can be hard because you just sometimes don't have anything. That's okay.
Days you're just almost like a slave to your phone because it's ringing.
Yeah, well, that's that. I've had to put my phone in the other room when it's family time, and I'm actually, if my wife's going to listen to this, she's like, "No, you don't." I'm trying to, but it doesn't ring as much for insurance advisors than I think it does with mortgage advisors, because most people see insurance as like a necessary evil, right? So they don't really chase me up too much. It's the providers that would chase me up, not the clients so much. You get the odd one who's like, "I just want this done, Scott, let's go." And you're waiting on underwriting. It's like, I can't, your GP's on holiday, sorry, like can't do much about it.
I remember chatting to some mortgage advisors and they were like, we should have gone into insurance, because they go golfing with an insurance advisor and the whole time they're playing, their phones are going off from clients and the insurance advisor's just relaxing, hitting, and then just going, well, usually it's me doing the calling.
It's a lot of surprises in insurance. Like this would have been something I learned up pretty good. Like you can ask all the questions, you can go through all the medical history questions, and all of a sudden you get med notes and it's, "Oh yeah, this client had cancer 2 years ago." And you're like, "What?
How did you forget that?
How did you forget that? Like, did you try to sneak it on me? Like, what's going on?" And yeah,
I think you just forget. Like,
I do, especially males. It's always the males with problems.
Not that I've had anything serious like that, but I think over the years I've had a lot of like ACC claims, like various sporting injuries. And I remember I got insurance put in place and he's like, "Anything?" And I was like, honestly, like nothing really. Like explained like a couple of minor sporting injuries that I had in the last year. And then I remember like 6 months later had an ACC claim, and I had to like go back through some old notes. And the person out the room was like, "Wow, you got one of the biggest files I've ever seen." I was like, "What?"
Yeah, we forget.
Yeah.
It's about expectation with the client too. Like, if I always tell clients, like, I love surprises in life. I do not want surprises with you though. Like, I don't want surprises at claim time or application time or anything. Like, I don't want surprises.
Surprise birthday parties, absolutely.
Yeah.
Which actually today.
Yeah, that's right.
Imagine if I pulled down a
That'd be
latch
impressive.
and, like,
My
balloons.
birthday would be in Trail, so you might have known.
Yeah, I mean,
That would have been some pretty good research though.
Yeah, that'd have been almost a bit creepy though. You probably.
Yeah, probably.
Who's this guy?
But don't like surprises with clients.
How do you get that out of them?
You just got to be honest. Like, look, if you don't disclose something, you're not going to have a claim. You're going to be paying all this insurance for no reason. Like, I don't want that. I'd rather that we knew what you were excluded, or knew the loadings, or knew beforehand. Yeah. I can't think of a client who's intentionally withheld information. Like, I don't think people do it intentionally. I think people know the consequences pretty good.
Sometimes I feel like if something comes too easy, you're almost like, all right.
I take it back. There was actually one I walked away from because I got that hunch. I just got a hunch on it, and I did walk away from that. It was a small one, but I thought, no, just something's not feeling right.
Yeah.
She had insurance in place, so I just said, "I'll, talk to whoever you have." I was actually with the bank, so maybe give a ring to the bank because something wasn't right.
Yeah. And sometimes you got to go with your gut feel.
Yeah.
Unfortunately.
Yeah.
I mean, without even delving into the details, like, it's like, you see that across all types of industries, I think.
It's not. I got into this industry like very confident that I was not going to be a salesperson. Like, I did not want to sell. I did that for 12 years. I don't want to sell, and I don't feel like I sell. And so I think that comes across in our conversations, like very upfront about how much I get paid. And I think people, like, I tell people, look, I've added this little optional benefit to your life cover this is exactly how much it costs. Like, just a heads up, if you put it on, like, I do get paid more. You need to make the decision on if you want it or not, but I think you should have it. Yeah, that transparency, I think, is so
Builds
important.
trust.
And that's an industry that doesn't have trust, right? And we're going to take another 10 years to get that trust, probably. Yeah.
It is tough. I remember I was reading about like business case studies about businesses that have done really well. And you think about like what is an industry or a buying experience where there's like a complete lack of trust. And the example they gave was a company that I can't remember the name of the business, but they took over like the used car sales part because people have like a lot of fears. It's like, are you going to be sold a lemon? Are you going to be getting like a bad price because you have to haggle, which people don't really want to do. And they're like, okay, how can we remove all these areas where there's like a lack of trust so that we're the market leader? So they had things like fixed costs, like zero negotiation. You know, if you don't like it after a certain period of time, comes back. It comes with like a clean bill of health. Like all these little things they could do to make that process just so carefree for the customer that they've just got no fear when it comes to getting to the purchase. And I think it's probably a similar thing what you're trying to do. And it can be hard to refine it, especially when you're advising on other companies' products. You don't have a lot of control over that.
Well, and it takes time. Like you could sit there half an hour on like disclosing stuff that the client should know, probably more than that, right? Like even just the premiums in the next 10 years. Like insurance isn't you buy it and you're done, right? It's a monthly, weekly, fortnightly payment. Like what are the premiums going to be like in 10 years? And the quote will spit out the answer, but you show it to the client. Like a lot of the times clients had no idea insurance even goes up. And it's like, no, you can structure it so it doesn't go up as much, but it's still going to go up with inflation or what have you. But showing them the 10-year forecast, like, yeah, you're in your 20s, pretty cheap, but look what it's going to be in your 30s. We want to, start building that wealth so we don't need as much in your maybe probably 40s. 10 years is probably, if they can grow that wealth that quickly, that'd be pretty good. But, in 20 years, we want to be self-insured. Like that's the ideal goal. Not everyone's going to get there, but we want to have assets to the point where we don't need insurance. Maybe we got health insurance, but we don't need life cover because we got $1 million investment property or in shares or, $500,000, whatever is comfortable for the client. But the first couple of years is survival mode, especially because most of my clients have just bought a house. They're not worried about the next house, right?
Yeah.
But when you do the review or when I've seen reviews, it's like, how do you also encourage the client when you've got equity in the house to actually keep going rather than top it up just for a want, and being like, how do we leverage this into more wealth? And I mean, everyone's different in how they spend their money, but it's not just insurance. Insurance is just the kind of the mechanism, right, to get there.
So you said you read The Barefoot Investor.
Yeah.
Are there any other resources that you point your clients towards to help educate them in their financial literacy?
You got to be careful with some of the social media stuff because a lot of it's product based. Like, there's even one recently where she's been doing it for 2 or 3 years, and all of a sudden she's plugging a course. And I was like, did you not make a course? That was why you were so good. It's because you didn't have a product attached to what you were doing. And I
hate it when people have a product attached to what they do.
Yeah, that's exactly right. But no, it's not shoved down your throat on this, right? Don't even really talk about it. It's
try
subtle.
not to.
Yeah.
Try not to. Yeah, very subtle.
But it depends on the person. Like there's quite a few podcasts that are awesome. But then there's certain tones to them. I don't know if I'm allowed to mention the names. Is that all right?
Yeah, fair.
Keep the Change is awesome, but there's a certain clientele it is not for.
Yeah, right. Yeah, good podcast.
Yeah. What's the other one called? The Secret. There's No Secret. That's a good one.
I don't know.
I think she's attached to Kernel Wealth. I haven't listened to her for a while, but she doesn't push the product too much. She subtly mentions it, but really good education piece. I've heard, I can't remember if it's Girls Who Invest or Girls That Invest.
Yeah.
There's one American and one's Kiwi. Try them out for a bit. They're good. A couple of books. The Francis Cook one's good. The second one.
I've heard good things. And obviously we talked about The Barefoot. And I think it was called Girls That Invest.
Yeah, I've got it on the shelf. I just haven't read it yet.
My partner's read it. And it seemed very similar to like, I mean, I might be wrong, but like from the little flick through I had, it did seem quite similar to the Barefoot Investor, but it's just like marketed differently.
Yeah. And there's a big push for investing ever since COVID too, because the stock market went nuts, right? And people made a lot of money. But then, like, I know there's a couple that are like, oh, you know, $5 a week, a coffee a week will get you this much money in 20 years. And I'm just like, yeah, but what's your goal? You know, like, your goal is to buy a house. Like, that's taking you away from your deposit, right? Which is hard to get nowadays. So, you know, if you're going to go invest for 2 years and then withdraw it for a house and you're in a growth fund, it's like, well, it doesn't really match. Maybe you got lucky and it went up, but it could have just easily gone down, right? So it's that's why it's hard for the social media and the podcast to take everything into consideration. It's about picking up, like, even outside of financial stuff. Like Atomic Habits was a phenomenal book on how to get your finances in order. Like, there's the mathematical component of finances, and then there's the emotional part, right? The mathematical one is easy. Well, maybe in my brain, like it's A plus B equals C, or A minus B equals C, right? Income minus expenses equals your leftover, right? But it's the psychological. How do you say no to your friends about going out for dinner every single Friday night or Friday, Saturday night? How do you break the habits of shopping if you have a shopping issue? Or with me, it was lollies. Man, when our first son was first born, I used to walk by the dairy almost every day, buy a little thing of lollies.
Smash a little dollar bag.
Yeah, a little sugar hit. Yeah, gained some weight doing that. But like it's and everyone's different, right? You can't focus on finances. Might be a little bit of a phase in your life, right? Where you focus on it for 6 months and then you get it under control. And then the next part's your health, and the next part's your family, and then it's hard to do it all at once. And sometimes and then when you come back to your finances, you're not where you started. You're a little bit farther ahead. Like life isn't linear. It's up and down, everything. So it's I think people are really hard on themselves with their finances. They don't believe in themselves either. I don't know where that came from. It's not a New Zealand thing. It's in Canada too. It's just don't believe that. Oh, I'm bad with finance, bad with money. Oh no, you're just battling a multi-billion-dollar marketing industry. It's hard.
There's a lot of information.
It's a lot of information. Yeah.
But once you have that base level understanding and confidence
is the biggest. That's the hardest one.
You know where to sort of, cut through the bullshit.
Yeah.
So that being said, do you push people into putting all their money into Dogecoin or?
I had a big conversation about Bitcoin with my dad. But,
yeah. Is he a believer? Or is he?
He's a believer. I won't speak on behalf of my dad, but hey, I'll be honest. I don't understand it, so I just don't touch it.
Okay.
And this is cryptocurrencies in general. Like, I know some people can be listening like, what are you doing? But it's too risky for me. But that's a mindset for someone who has 2 kids under 3. You know, we still need to buy our house. Like we moved to New Zealand instead of buying our house. We started this business, being self-employed instead of buying a house. So we're still on our house journey. So it's different mindset. I mean, if we had our house paid off freehold, maybe it'd be more interested in the risk.
More of a risk appetite.
Yeah. But for now, like every time I get a bag of lollies, it's $1 away from our house deposit, right? And that's my wife's goal though. It's not just my goal, it's our goal. Like, it's a direct correlation. Didn't need it.
I did an episode a while ago with Darcy Ungaro, and he's advisor.
Another Canadian.
And he's big time into his
I know he
Bitcoin.
is. Yeah.
And he does a podcast called The Everyday Investor.
Yeah.
And he's had some great ones talking about it. So, yeah, I think like you said, it's like hard to understand it necessarily, but the more you understand, you're like, oh, maybe I'll dip my toe in there. But yeah, always comes back to the goals. Goal for you,
goals.
Get the house.
Most people do not have goals. They're just told we need to buy a house, Maybe it's the people I talk to, but they've never really sat down with their partner and what are our goals? What are our goals as a family? What are our goals individually? Because you should have goals individually too. Because that's going to guide. Once you say, I want a house by, SMART goals, right? Specific, measurable, attainable, time-bound. I think that's it. Once you say, I want a house by 2025, you start feeling guilty about your lolly bags.
You should never feel guilty about that.
Nah. It's my stress relief is sugar, eh?
There you go. At least you're not smoking or...
No, drinking stopped too.
Yeah.
Pretty good. But yeah.
There you go.
Yeah. Still bad. It's all right.
Hey, everybody's got their weakness.
Yeah, that's right.
Yeah. Okay, so it sounds like you've got a good plan at least for like your personal and professional life. You've had a couple of years where you've been able to cement yourself. You probably still feel like you've got a bit of imposter syndrome, but from you talking to me now, you sound so confident about it. I can't see you not coming across that way to your clients.
I did my first group cover. There are 32 employees in November 1st. So just finalizing the last few that haven't done it yet. Darn employees. Now, that was a big confidence booster too, because it's like, hey, never done it. They asked for it, so let's figure it out. And so it's being able to go through that process and made mistakes. But I was upfront with them and said, look, you're going to be my first group cover. There's going to be hiccups. There's going to be things that maybe aren't communicated perfectly. But as long as you're okay, let's do it. And he was okay with it. But it's, confidence is there now.
Fantastic.
Yeah.
That's the most important part. And that's the confidence you need to instill in your clients too.
But it's also like coming back to Mortgage Bliss too, like they offer me a contract that's fair too, right? Like when I first started, I don't want to name where I started, but I had what I like to call commission breath, right? Like I needed the commission on every deal because it wasn't the greatest commission or structure of how I got paid, right? So if you're looking to bring someone into your business, like you got to pay them fairly too, because otherwise they get commission breath. Like I genuinely, as long as someone has something in place, like I'm not too concerned what people do. As long as they're educated, it doesn't matter if they, cut the premium. Like if I give a recommendation of $100 a fortnight, they go with 50, sweet.
Mm-hmm.
Whereas a year ago, I would have been sweating like, oh man, I was really counting for that. Right. So because Mortgage Bliss is offered like a fair commission structure,
okay,
that makes a big difference to the confidence too.
So is it rather a commission structure rather than like a salary type role?
Yeah. So I have the appetite for commission, and not everyone's going to. If you're looking to hire someone and they've got a house and they're the primary income earner, like putting him on commission base is going to be setting up for failure, I think. We're mortgage free. Not mortgage free. We're renting.
Yeah.
My wife earns good money.
That's a good way of putting it. Yeah. Hey, I'm mortgage free.
Yeah, technically right. My wife earns good money. Like we had our deposit for the house that we could rely on at the time, because we were looking to buy again in 2021, right at the peak of the market. And we went and saw, this is before I even knew the industry existed. We went and saw a mortgage advisor, and he's like, oh yeah, you can, once your wife's back at work, you can get a $750,000 house. And I'm like, in Whakatane? No. Like, sorry, I'm not spending that much on a house. I know those people in Auckland are laughing, but...
or crying.
Yeah, or crying, yeah. But, and interest rates were 1.99, I think. And I'm like, these are only going up.
They got to, they got under 2, didn't they, for a little?
I think they were into the 1.
Yeah.
And so it was right at the lowest part of the interest rates. And I said, these interest rates are only going to go up. Like, if we have to refix, like, we're in trouble. So we said, no, we're going to have to wait on the market. Like, what can we do in the meantime? So we had the appetite to be commission-based. And I like it because I need a little bit of fire under me to get going. But you can't, if you're hiring someone, you can't put them all. It's got to be a tailored agreement, in my opinion. Can be part salary, part commission, because you want to incentivize them to get business. Because you have to go find your own business too. Like I've been pretty fortunate. Like the Mortgage Bliss guys are well known in the community, so I've been able to piggyback off that. But the word of mouth's gonna, run out. I'm gonna have to go with my own business soon. So,
well, you got to hope that you've looked after those clients enough they refer you their friends and family.
That's the first one. But it's not like I'm getting 10 referrals a week. I'm getting 1 or 2, and that's enough to sustain me. So I need to go. I've got time to bring on more. So I got to go and find my own clients too. So, there's got to be, I like the commission structure for that reason, is like I'm forced to kind of go get my own. Because if I was salaried, you're not having that. But everyone's going to be different. Because I've heard you talk about how to bring more advisors on, and on previous podcasts. And it's to me, it's getting that structure right. Because that's why I would have left the first firm, right? is the structure wasn't right for me.
And if the structure was right, maybe we might be having this conversation, but or be having a different one.
Yeah, absolutely. And that one was more online based, and I don't do well online. I'm a people person. So in Whakatane, like I know a lot of people you've talked to said, oh yeah, everything's since COVID's been online. It's been great, so much more efficient. Can't go online in Whakatane. You got to go face to face. It's difficult to do it. Like you might be able to do the third, fourth appointment, like the follow-up stuff online, but not you got to meet them for face to face. It's too small. But then that being said, everything's 20 minutes away.
Yeah,
like it's not an hour and a half drive. Yeah.
I think, like going to a client in like other side of Auckland or, even Wellington to a degree, it's going, oh my God, this is going to take me an hour to get there.
And then they forget. Yeah. And then they don't answer the door.
Oh, goodness. Hey, but at least, it's you got to play to your strengths and play to the market you're in. And, like Whakatane is a bit more rural. People are, they want to know, they want to look at you, see you in the flesh and trust you.
Well, I like it too, because if there's a claim, like the last thing they want to do is meet their insurance advisor. Like they've got a death in the family, they've got cancer, they've got loss of income. Like they're in panic mode, right? So to see someone they know now, not to the point where you're gonna know everything about them, but they've already trusted you. I think that's huge. Whereas if it's someone online, it's more, in my opinion, it's more transactional. But I could see the value. Like so much more efficient online. Don't get me wrong, because you could do appointments in half hour if you really wanted to. Whereas face to face, it's approaching an hour because I don't know. I like to talk.
Yeah, things drag out a bit. And, but it does give you an opportunity to build that relationship. Okay. No, it's so interesting here about your journey because, having a lot of the people that we have on the podcast have been in the industry a long time, got long established businesses, processes, but you've like come relatively new to the country, new to the industry, but I feel like you've made so much progress in just a couple of years. So I think you can be quite proud of that.
Yeah. On Wednesday this week, I officially earned more than I was making before I went self-employed. That was a big milestone for me.
Well done.
Yeah. And there's still 2.5 months to go.
There you go.
3.5 months.
So we get big celebrations.
Yeah. So I was pretty excited about that, actually. I kind of pulled my zero report and I'm like, that's pretty neat.
Fantastic.
Yeah.
And if somebody wants to get in touch with you, how do they find you?
I think you'd probably have to go to the Mortgage Bliss website.
Yep. Got the merch on?
I'll be on there. My phone number, email. Feel free. Like if anyone has family members wanting to get insurance isn't boring. I mean, you can make it boring.
I didn't fall asleep on this podcast.
Oh, there you go. People think it's boring, but I really, like if you make it about an offense play, like honestly, clients actually get excited about it, which is kind of weird. 5 years ago, I would not have gotten excited about insurance, but here I am.
Here I am. I thought the same thing. Here I am talking on a long form podcast about an insurance advisor's life.
Yeah. Well, the alternative system we have is that the public system picks it up and our taxes are increased, right? So if you got an insurance system, you're basically tailoring your taxes to something that you need. That's how I like to think of insurance too. Yeah. So rather than the public system picking up, because just said no one wanted to come up with the income protection scheme, right?
Probably, that went down like a lead balloon, didn't it?
Canada has that system, so I was very familiar with it.
Right.
But like that would have increased our taxes. So instead of having taxes and paying for something that not everyone needs, a lot of people will need it, but not everyone, you get to actually pay for insurance to tailor it to you. Because some people will have a big sum of cash, so they might not need trauma cover as much, right? So you don't need to pay tax on it. But anyway, I like to think of it that way too. Get tailored protection.
It's a great way of looking at it. No, thank you so much, Scott. It's been great having you in here, and I think there'd be a lot of value for people looking to join the industry or looking to get in, become an insurance or investment advisor.
Sure, thanks so much.
Pleasure.